This is the second video in our series of corporate fraud principles. This is Dave at Active Intel Investigations. Just going to hit on a couple things of preventing fraud or discovering fraud in your enterprise, in your company, that might be helpful. First thing is, if you have guidelines about money or security, change those guidelines on a regular basis. For example, if you have a certain threshold over which a check that's written from your company needs to have 2 signatures, change that. So if it's $10,000, it needs 2 autographs. Well, maybe change that to $2,000. Maybe change the people or the second person needs to sign it. That way, a person who is aware of your guideline can't build a scheme around it because they know that things are going to change. Also, make sure that the person or people who match debits and credits on your bookkeeping or accounting are 2 different people. You don't want to have the same person creating the debit that authorizes the credit, because that's an easy process for fraud. Make sure that you have retention interviews. This is like an exit interview for somebody who is leaving your company, but it's a retention interview. Don't make it part of a performance review or some annual review. Make it just a random retention interview. Say, look, this is, a discussion we're just going to have. How are things going? What can you tell me? You will get valuable intel from your employees about things that they see inside of a company. They may be seeing some of the early indications of a fraud or a loss or a theft prior to it happening. They may not even know that it's a fraud or a theft, but they'll tell you things that they see. The other thing is, if it's the actual person who's committing the fraud, that may stop them in their tracks, or you may kind of sense that they're hesitant about giving you info. If you commit to being a company that has loss removal as a profit center, then it's not going to be a difficult process to undertake. It'll be part of your corporate culture, part of your habit. Fraud loss removal from that company activity is going to be something you do every day. Separating tasks from different departments is a part of that. And most important, like we talked about in the last video, making sure that background and references on new onboarded people is a consistent process. It may be inconvenient. If you're the HR person, if you're the CEO, if you're a general manager, it's inconvenient to call references to verify things. And sometimes it's awkward to call another company and get through to the right person and have them give you information. If it's that inconvenient, sub it out to somebody else if you don't want to do it yourself. But the importance of making sure that everything that enters your company, especially people, is valuable and matches your current enterprise that you worked hard to create is worth doing, and keeping that fraud from your company will save you a lot of time and effort later.